If you think this economy is bad now, wait till the word gets around the world that Uncle Sam has become a deadbeat.
Debt ceiling, sovereign debt, growth, social instability. What can the IMF do about it? Now, what does fiscal consolidation mean? Does it mean that it's going to stop growth?
Is there a risk that the United States could lose its AAA credit rating, yes or no?
No risk of that.
No risk.
No risk. Again, if you listen carefully now, you see the leadership of the United States of America, the president, the Republican leadership in both houses, and the Democrats recognizing now that this is the right thing to do.
I want to announce that the leaders of both parties in both chambers have reached an agreement that will reduce the deficit and avoid default.
Let's be serious. This entire process is a joke.
So the fund is clearly and has been back in business. The previous managing director, Dominique Strauss-Kahn, did a very good job at resetting the IMF as a credible partner, as a source of intellectual caliber of the highest level.
It's a beginning of global governance. It was easier, as I said, because of the crisis. We need this. And if something has been understood by the layman during this crisis, is that globalization is no more only a topic for lectures and conferences. That's a reality.
I think most Americans would prefer to be sovereign and free than to be a vassal state of international bankers.
Sure, we get a few more trinkets, we get to buy more products, but we're selling our souls to the devil.
Maybe in layman's terms, this is one part of the government lending another part of the government money, which would not lead to long-term confidence once the American people understood the basics a little bit better.
Well, it should be added that we also have a funding cost, and as interest rates go up, we'll have a liability cost as well as an asset cost, so it may or may not be a return to the Treasury.
I just might say that it's possible for a country to have a currency without a $1 trillion debt.
Yes.
Thank you, Mr. Chairman.
Yeah.
The way you get out of this mess is you need to accept the fact that the dollar is in a bubble and needs to be marked down by 50 or 60%. You need to take the hit.
That's the bottom line, all that really matters in this argument. If the rest of it, all the predictions and projections about what the state of the economy will be 7 or 8 years from now, sounds like mumbo jumbo, well, that's because that's just what it is.
There's this huge debate going on as to whether or not the austerity measures that are being decided, that we actually recommend in many cases, will be a hurdle to the recovery and the picking up of growth. Well, certainly our studies show that in the very short term, there can be a negative effect from fiscal consolidation. And to be precise, our studies indicate that a reduction of 1 point of the deficit in many instances entails a reduction of 0.5 point of the growth number. So there are short-term consequences as a result of the fiscal consolidations that are needed, which is why it is most helpful actually to provide for fiscal consolidation, but to make sure that they will actually affect the economy at a time when the recovery is a little bit consolidated. So that's essentially the recommendations that we have been given on a consistent basis, not only in relation to the United States, but in relation to many of the fiscal consolidation policies that we recommend throughout.
IMF is now pulling the strings in Europe. They're also pulling the strings in Washington. Christine Lagarde, as a matter of fact, said, who's the new chief of the IMF, that the extraordinary privilege the extravagant privilege of the U.S. dollar that's been enjoyed since World War II is now at risk as the U.S. dollar loses its world reserve currency.
The United States prized top AAA credit rating has been cut for the first time ever.
This has been sold as a sovereign debt crisis, and it really is a bank solvency crisis. I mean, that's what the Federal Reserve has opened up these swap lines for, that they're worried about the Federal Reserve System. This is all about propping up the banks. This is all about making the banks whole. They don't care about the people of Greece. They don't care about the people of Spain and Italy. They don't care. They care about the banking system, and they want control.